Hey everyone, thank you so much for joining the Behind Company Lines podcast. Today we have Vasily Nikonov, founder of Velvet.Capital, a DeFi operating system that helps launch on-chain funds and structured products. Vasily, is so exciting to chat with you. I know I think we were talking, it's been almost half a year since we've been trying to schedule this, but ultimately excited to finally get you on it and really talk about this ecosystem of DeFi, which we hear about decentralized finance. And I think a lot of people have maybe some kind of mental structure around what that means, but they don't necessarily understand the diversity and complexity about the different types of protocols and products that are out there. So really excited to dive into what those look like. But before we get into all that good stuff, what were you doing before you started the company?
Yeah, thanks, Julian. Thanks for having me. Great to finally be talking to you. Yeah, happy to share more about DeFi, about what we're building. And yeah, I think my past experience would be a great start here, because I basically have a combination of more traditional finance background and Web3 crypto background, right? So on the traditional finance side, I was actually project leader at BCG here in New York, working with a lot of financial institutions, helping them launch digital products, launch new startup ventures, launch new corporate products as well. So it could have been online banking, mobile banking, investment management platforms, insurance platforms, basically anything that companies wanted to launch and improve in the digital world. But that was kind of TradFi meets Web 2. And then on the Web3 and crypto side, I've been in the space since I would say 2016, 2017, advising projects, working with them on the side, trading as well. And then finally, I was a venture builder at LongHash Ventures in Singapore. That was one of the first incubators and VC funds specifically focused on Web3. That was back in 2019. So we had the first cohort projects in the Polkadot ecosystem even before Polkadot launched their mainnet, working with a lot of great projects there as well. And then, finally last year, I decided to break free and launch something on my own. So excited to share more about my journey and what we got cooking here at Velvet.
Yeah, it's so exciting to see kind of where your progression is. And I'm curious, like, you hear a lot about companies, especially there's a huge movement to neobank, right? Bringing everything online, doing all these services. And you saw that at BCG. And outside of connecting everybody or creating the increase of speed, where was the ceiling, like the glass ceiling for a lot of these traditional institutions? Because once you kind of boil it down, it's like a trading app or a mobile app. It's almost like a white label application at this point. It's kind of a similar experience. So there's not a lot of innovation there. What was the ceiling that maybe you saw, or if you did see one, what would that be? And also, is it Web3 that kind of creates a new ecosystem? And is that the only thing out there? Is there still stuff in Web 2 that we're still waiting to see?
Yeah, look, I don't want to discount all the great things that we did, right? But I just gotta say that all the innovation that we've been driving as in traditional finance for the last 20 years or so, been focused on user experience, right? Sort of the front end and maybe middle layer of the tech stack, right? How do we actually create all these digital services? But if you look underneath into the core banking infrastructure, it was still a code written 50 years ago sometimes, right? Even before I was born, by some guys who are not around. We got to find like real experts to figure out what's happening over there. It's a very monolithic piece of software that no one has any idea how to do, right? And of course, we had some projects on how do you modularize that? How do you turn it into microservices, etc. But I would still say that we haven't seen any innovation in the core banking infrastructure or core financial infrastructure up until the blockchain came out, right? So now I see Web3 and I see DeFi as basically new slice of innovation, right? The first innovation on the back end of financial services, if you know what I mean, right? And it's very exciting to be here and very exciting to do something in the space after working so long in the traditional finance and having that kind of constraints of the core system, right? Because that is the glass ceiling, right? When you're building on top of something that's 50 years old, that's gonna limit you in the ways you can.
Yeah. And it's fascinating. Where obviously you started kind of pre the Bitcoin boom in 2018, right there on the crux of it. What were you seeing in terms of companies or individual projects? What was being built during that time to start kind of reinventing from I think principles that have been around, but reinventing the financial institution kind of ecosystem, having things decentralized. Who was kind of leading that forefront, and what essentially led you in that direction and gave you the traction that you needed to start the company?
Yeah, yeah, sure. Look, I think that's an interesting question. It's a kind of a loaded question because I think blockchain and Web3 is not only about technology, but it's also a little bit about philosophical views, right? It's a little bit about
Yeah.
philosophy,
Yeah.
right? And kind of it's just a combination of these things that really excites me and I think everyone else working in the space. I mean, back then, if you look back to like 2017, most people been focusing on the Ethereum ecosystem, right? I think it was the first, like end of 2017, beginning of 2018, the first boom of people realizing what Ethereum
Hmm.
infrastructure can do, and then coming up with all the different crazy ideas of different decentralized apps that you can build on top of it, right? And it was completely crazy, could range from legit DeFi products that some of them are now blue chips, right? Like lending protocols or DEXs, to a completely crazy stuff like dating on the blockchain or some sort of gaming, etc. Right? I think it was still super early, right? Because we were just building
Yeah.
out the infrastructure. So I think the market just went ahead a little bit of itself and later realized that actually the infrastructure is not that ready to support all these crazy use cases.
Yeah.
And yeah, finally, I think gradually now we see
Yeah.
the infrastructure being more mature, the middleware, so to speak, all the Oracle infrastructure,
Yeah.
the development tooling got a little bit more mature. And finally, now we can enable all these use cases, right? But it's still,
Yeah.
I would say it's still the early days. So we all just here building it out together, right?
Yeah, yeah, yeah. It's fascinating to think about, or even just if you want to give the audience some context, DeFi. Like, what is decentralized finance? I think we all know it philosophically as not one centralized location making all the approvals for transactions, but a cohesive collection of people confirming that something is valid. That's kind of like the big grandiose philosophy. But how does that actually get implemented? Is it on how technology or transactions are being like moved, or what in particular are these DeFi protocols that we don't see but are on the underlayer that you described earlier?
Yeah, so I think philosophically you're right, and maybe I would go even further, right? Philosophically,
Yeah.
DeFi is just a way to build peer-to-peer finance, right? So how do you actually build peer-to-peer financial products without relying on the centralized intermediary, right? And I think it's a very noble thing to do because if you look at the history, for millions of years, we actually had finance as a peer-to-peer structure, right? You exchange goods and services. Maybe you had some way to pay with shells or whatever. I mean, now after that we got to currency finally, but for the millions of years it was pretty
Yeah.
much peer-to-peer barter trading. And then the technology limitations that we had before with the internet still required some sort of centralized intermediary to facilitate the transaction, right? So you had to trust someone, you had to rely on someone
Yeah.
keeping the ledger and kind of having a little bit of a God mode on what they can do with your money, right? Freeze your account, block your
Right.
transaction, right? And and blockchain enables that. And there are several things when it comes to DeFi. I think several specific characteristics that I usually like to
Yeah.
highlight. So first of all, it's programmable, right? So when you
Mhm.
talk about DeFi, you talk about programmability. You actually can write a code and deploy it on the blockchain. Everyone can see, can validate and verify what this code is doing. So I know if I send one USDT to that contract, I
Yeah.
I know how this contract will behave, right? For example, I know that if I send one USDT, this contract will send me an equivalent in Ethereum using this calculation, etc. Right? So that's a very kind of good way to see the expected behavior. Then second
Yeah.
characteristics, it's permissionless, right? So
Yeah.
before kind of blockchain movement getting big, I don't know if you remember, there was the open banking movement, which is basically, okay,
Yeah.
let's make all banks open up their API so that other developers can build new applications on top of it, which was good.
Hmm.
But again, going back to my point, that was a little bit of front end innovation because on the back end, it was still like this legacy banks. The blockchain is completely permissionless. So anyone can just build a new product deploy a new contract, connect it to other protocols, and then just make it work, right? So it's completely permissionless. You don't need to ask Vitalik to give you permission to open up an API, right? You can just open your laptop and start building. And then third characteristic I usually like to give is that DeFi is non-custodial, right? So again, no one actually keeps the custody of your assets, right? And now I would say there are still nuances with the new developments right now. Sometimes the core team of the protocol still has multi-sig and they can actually execute something by signing transactions. But fundamentally, at its core, DeFi is trying to be as non-custodial as possible, cutting out the middleman, making sure that everything is just governed by the rules. The next one is transparency. I mean, I talked a little bit about it, but that's basically just everyone can see what's happening on chain. And the last one is immutability. So that's just making sure that what you see is what you get, right? Usually when you deploy a contract, in the old days, all contracts were non-upgradable. So once you deploy it on Ethereum, it's pretty much going to stay there for eternity till the end of time, right? And you can see what the expected behavior is, right? Yeah, now there are some nuances. You can upgrade the contracts and now there are new technologies around it. But I would say those like 5 characteristics are the core of what we call DeFi and what we move towards.
And what would you say? I mean, it's so crazy thinking about creating as much of a peer-to-peer experience as possible, being like, obviously FCX news, that's kind of old news in today's age, but kind of more recent news in crypto in the sense that a company is structuring as a centralized entity, but kind of falsely deploying these philosophy around decentralization. But what is the challenges to actually make peer-to-peer transactions and not have that validity? Is it the rule set that you build within the blockchain that you've deployed? Is it having the volume of people to actually transact? What are the challenges to actually creating a peer-to-peer transaction network that doesn't rely on something centralized?
Yeah, so I think the main challenge is just solving the cold start problem, right? Solving the network problem. How do you get the first liquidity and how do you get the first users? And that's where the token comes into play, right? Because if you think about cryptocurrency, what cryptocurrency is, it's usually just an incentives mechanism, right? So for example, Bitcoin is the incentive mechanism to reward miners who actually maintain the network, right?
Yeah.
Can Bitcoin network live without Bitcoin as a cryptocurrency? Theoretically, it could, right? But no one would mine Bitcoin, right? Because there is no incentive to just burn the electricity, right? That's why since the days of Bitcoin, and if you look at all the other tokens, all the other cryptos, what it is in its core is just a way to incentivize different participants of the network, right? So usually to solve this network problem, right, and to get the sustainable amount of people using the platform and making this peer-to-peer transaction possible, projects release their token and use it basically as a marketing mechanism, as an incentive mechanism to bring the first people in, right? To bring the first liquidity. They give it in form of staking rewards. They give it some airdrops. They give it some other different mechanisms. And that's really just a way how to get people to do what you designed them to do, right?
Yeah. And how do like a lot of these protocols overcome that cold start challenge? What are the go-to-market strategies? Are we starting on Discord? You started gaining a community? Are you on other channels? Like, what is that? The alternative to Twitter is like Mammoth or something. I can't remember exactly the name of it, but there's all these different communities that I from an outsider perspective, that start before a protocol gets launched. If that's the typical playbook, is there anything else that people have tried and have seen success in?
Yeah, that's actually a great question. And people even came up with a new term, right? We used to have MVP, minimum viable product, and now we have MVC, minimum viable community, right? Where you actually create and manage the community even before you launch the product, right? And the trick there is, how do you get enough like-minded people and enough potential users and supporters to the platform early on? How do you test the ideas with them even before you actually build something, right? And then finally, how do you co-create together, right? And I mean, there's no one size fits all, right? All the projects and their own different path towards decentralization and community ownership.
Yeah.
But I would say every project starts with Discord community, Telegram community, Twitter page, and Twitter community announcements,
Yeah.
and a bunch of other platforms. But yeah, the most successful projects, and that's what we did as well in the beginning, created the community and then brought together like-minded people to test the ideas with, and then finally go create together.
Yeah. And obviously just to chat about some of the mechanics of community, well, how do you keep people engaged or building towards something? Is it working on specific projects? Is it doing polls every day? I feel like this whole ecosystem, I think we all maybe have an idea of how to gain community, but once the spotlight's on, you realize I only have a few things to talk about. How do you continue to not only break open a discussion, but continue to incentivize people to build towards what you do? Is it in association with the mission of the company? Is it about the technology? Does it involve everything? What do you consider and how do you kind of strategically continue to grow that community without, doing it artificially or even doing it where you're adding incentives, almost like a referral program and things like that? How do you do that?
Yeah, I would say it's everything together, right? And it's actually really hard. I think the hardest part is that everyone's competing for attention right now. Everyone's overloaded with information, right? Like I receive thousands of different messages, like hundreds of different groups. I think every single person, not even in crypto, has like email, whatever, WhatsApp, Twitter, maybe Telegram, maybe some other channels, right? SMS. So like it's impossible to keep up, right? So I think the main trick is how do you, and then newsletters, don't even get me started on that. Like I think I used to be subscribed to like 20 of them, but there are like hundreds of them out there. So how do you break through the noise and how do you actually create something that people are excited about? And there are several things, right? First of all is to try and get into like a very niche subject, right? Because there are already hundreds of newsletters about crypto, right? Everyone's sharing crypto news, but you got to find some niche that can unite people around, right? For us, it's DeFi Asset Management, right? For us, it's DeFi itself, right? And even looking even closer, it's DeFi Asset Management, all the tech around it. And then how do you keep the discussion, right? How do you keep sharing updates with them? How do you make them part of your community? And it's again, like making sure they include it in whatever is going on underneath, right? What the team is working on, what help we need from the community, etc. And then finally, incentives, right? You cannot build it just on your promises, right? We see a lot of people. Yeah, we see a lot of people releasing the token even before they're building a product, right? That is a little bit risky from the regulatory standpoint, unfortunately. I still think that it might be one of the best ways to build, but because of the regulatory constraints, this is not the way we did it, right?
Yeah.
We still want to decentralize sufficiently ourselves, build out the product and then launch a token. But what we did is we incentivizing people with, for example, NFTs. If we see that someone is contributing to the community, to growing the community or to the product, we giving them an NFT, which makes them part of the Velvet Founders Club and includes you in a closed chat, gives you additional benefits, and will give you more benefits once the product is launched, right? So it's everything together, right? But it's a tough job to actually maintain and grow the community, and make sure everyone's engaged.
Yeah, it's a whole different paradigm that I think, especially Web3 companies, I think are on the forefront of, but it seems like a lot of Web2 companies are picking up the message, which is that people want to be connected with their brands. They want to have a saying for what things are going to be built, launched, whatever. And then also they are equally incentivized to kind of keep aligned with that company's vision as long as they're acting in good part towards that mission, right? And it's interesting because no longer is it, I'm selling something that I know people want. It's looking for what people want and selling towards that need. So it's a whole different kind of category. And thinking about Velvet.Capital, just to shift our focus a little bit more onto the company, describe what you're doing and how you're kind of, not only obviously you're building community, you're incorporating all these people, you're building so many great products, but what in particular is exciting about Velvet that hasn't been seen in this space or very few people are doing? Describe what you're doing and what's exciting about what inspired you to do this idea.
Yeah, sure. So, I mean, as you mentioned, right, I'll just give a quick refresher to listeners, right? We basically building an operating system that helps you launch and manage on-chain funds and on-chain structured product, pretty much allowing you to create a DeFi fund or a DeFi product using our infrastructure. So what we did, we basically just build out the whole tech infrastructure connected with different DeFi primitives, decentralized exchanges, lending protocols, staking protocols, all sort of other yield farming protocols to actually give you an environment where you can experiment, you can create your own DeFi fund, and you can also onboard other people to join you, right? And there are like several target clients for us. And I would say right now we're focusing a lot on hedge funds and digital asset managers, sort of on the supply side of the equation. And they already might be managing some crypto, and now they're looking to set up an on-chain fund. Right. So the exciting thing about it is when you look at the last year, I think you mentioned FTX, right? We have Celsius, and we had like a few other things.
Yeah.
And the main problem there was that it was a complete black box, right? So you just put money in, they promise you some sort of whatever high yield, right? But then you don't even know what's happening with your money. They claim that they putting it into some DeFi protocols. Maybe part of it they did, but then they didn't manage the risk properly, so it all went down. Part of it was just outright fraud, right? What we saw with FTX, actually commingling customer funds with the company money and then just giving it away sometimes, or gambling, etc. So what we're doing is allowing you to create a completely transparent DeFi product, right? So that the clients who use it can also verify on chain what's happening with their money, right? So they put $1,000, they can see, okay, out of this $1,000, $100 get converted into, let's say BNB, right? And it gets staked into this protocol A, and then $100 get converted into ETH and get lended out in this platform, right? So you can actually see and verify the whole strategy on chain, right?
Yeah.
Which basically solves everything, all the problems that we saw last year, and gives clients complete ownership and transparency, right? So that's one thing.
Yeah.
And then for fund managers, it's also much better because as a fund manager, you can basically have your complete track record on chain. So when you tell people that I was the first to discover this coin that went 100x, now you can actually point out to your fund and say, okay, this is a complete on-chain records of what I've been doing. I started at whatever, $1,000, right? And I grew it until 1 million, right? And this is proven on chain.
Yeah.
This will help them raise new funds even faster, right? So those are just a couple of things, right? And then obviously we have a lot of sophisticated tech features to make it into the first actually professional grade asset management solution. Yeah.
Yeah. It's so smart to target hedge fund digital asset managers. I was thinking like, oh, it might be great if you're someone who uses a bunch of different protocols and have different assets and just kind of keep it localized in one location. But I think personally, I missed the point. The point is creating an ecosystem where not only you can track everything that you're invested in, but you can also have some analytics behind it to actually approve or support hypotheses or things like tactics and strategies. And now I can see it from a fund manager standpoint of that digital asset, having so much transparency and so much trust into their strategy or tactics, and even being able to, I could even see them patenting or kind of copywriting their strategy so that it stays within their ownership. It's so fascinating. How has the adoption from those hedge fund managers been? And was that the target audience the whole time, or did you stumble upon that? Because that's smart. Once one person starts using it, then he's going to tell his friends, and then you hit network effect, and then it becomes contagious. That's obviously the ideal, I'm assuming. But what was that always the customer that you were looking for? It just seems so brilliant.
Yeah. And I think thanks for that, right? Like we've been testing with a lot of different personas, and we realized that it's the best. Actually, going back to the cold start problem, right? It's the best way to solve this cold start problem because some of these hedge funds, they already have clients, right? So they're not just coming and setting up a fund with nothing in it, right? They bring in their existing clients. They might be co-marketing the fund together with us, right? To bring more clients to the platform, but they are now our target audience from our perspective, right? And all we're thinking right now is how do we take care of them? How do we give them the best tooling possible to actually launch the on-chain fund and then bring as much capital as possible there. All right. And then on the adoption side, we have around 15 hedge funds, and digital asset managers right now that we're piloting our second version. That's going to be our more professional grade solution. And everyone's loving it, right? And we've heard amazing feedback, some of them saying that's like the best that they've seen this year, which is a very, very high, high mark considering all the developments that we see right now.
Yeah.
And we're really excited to onboard more, and we're launching our new version in the next few weeks. So welcome any hedge funds and asset managers, right? And I think we also very happy to provide additional incentives, right? We're going to allocate part of our token airdrop towards fund managers to join early, right? Obviously, as a fund manager, you can set up the fee for your fund, right? So that you're also earning from managing assets, right? So you can just set the fee structure that you're comfortable with. And we're here to support you as much as possible.
It's so brilliant because your customers are your sellers as well, which is the ideal situation as a founder to get yourself in. Being that there's so many, amazing to hear where the product is at this point. Tell us a little bit more about the numbers, the traction. How many people are adopting your platform? You have this new version coming out. What's been exciting about the traction you've seen thus far? And what is your prediction for the next milestone that you're looking to achieve?
Yeah, sure. Excited to share. So now what we have right now live is our beta version, right? You can think of it as an MVP just to test the concept, see how people are interacting with it. And we have a little bit less than 1,000 people using the platform, which is an exciting number in the crypto space for something that is not even a full-fledged product yet, just a better version. And we have 370K right now locked in the platform. It's again, considering that people just test it out with small amounts, it's also a good start for us, right? And now the main focus is just onboarding this new hedge funds and digital asset managers. Each of them has an average 10 to 100 mil AUM, right? And obviously they won't bring everything at once to the platform. It'll be gradual adoption, but we're really excited to start onboarding that institutional capital.
Yeah. What are some of the biggest risks that you think Velvet faces today?
Yeah. So, I think one of the risks is obviously on the regulatory side, considering what's happening with SEC going after all the crypto industry, so to speak, and other agencies as well. What is lacking right now is sort of regulatory clarity. So what's left for us DeFi builders is just we try to navigate and we'll try to protect ourselves as much as possible, right? So for example, we integrated chain analysis to make sure that we're not onboarding any sanctioned entities, right? That's a part of the sort of the AML compliance procedures that we adopting, right? On the regulatory side, again, we ourselves not managing any assets, right? So we just a tech platform, and we're partnering with fund managers to also create necessary legal structure for them, right? So some of them, for example, want to open up a separate legal entity, and we're helping them structure that as well. So the on-chain fund that they're launching on Velvet will have a separate legal entity. They might have their own KYC and onboarding procedures, right? For example, if they take in funds only from qualified investors, there's a special questionnaire that the clients are filling out, their KYC process. So on our side, we just created flexibility for them to enable all this onboarding process, right? And then you can only whitelist, if you're going down that route, you can only whitelist clients that went through this onboarding process, right? So there are like different things, how we basically manage risk on that front.
Yeah, it's so fascinating to think about not only the adoption, but the growth of this whole ecosystem, and thinking about if everything goes well, what's the long-term vision for Velvet?
Yeah. The long-term vision for us is just to be the number one cross-chain operating system, right? Because what we did for our first version is we launched on the BNB chain, because we actually backed by Binance Labs, and we're part of the BNB chain ecosystem. We got a lot of bounties and support from them, but we actually chain agnostic, and especially hedge funds and fund managers, they don't want to be limited to a single chain. So for us, being the first protocol that's going to enable omni-chain asset management is the key, right? And that's something that we're going towards end of the year. So now as a fund manager, you'll be able to set up a fund spanning across multiple chains, not limited to just Ethereum or just the chain, but actually able to move assets across chains and take benefit of all the best protocols, regardless what chain they are.
Yeah, man, it's exciting to think about where that's going to lead to. And also I'm just fully impressed with how you've been able to attach yourself to something that's hypercritical, but also, and obviously this transitions into my founder FAQ. So I'm going to ask you a bunch of rapid fire questions. Thinking about, how you're working within these hedge fund groups, how do you continue to build for them? How do you continue to stay tied in with their incentives? And have you ever been faced with things that you can't build? And what do you do in those situations where, your customers want something, but maybe it's outside either the scope on a regulation or technology basis? How is that relationship when it's different, but similar to early companies? Yeah. We'd love to hear a response to that.
Yeah. Well, for us, it becomes even more interesting, right? Because when you're building on chain, it's something in between software and hardware in terms of the development cycles, right? Because whenever you release a new smart contract, you need to do security audit, right? You need to do penetration testing and make sure it's completely secure and in the best shape or form. And that's why the development cycles are pretty long comparing to normal software. We trying to release every six to 9 months, right? But obviously it can get a little bit longer or shorter. So our answer is usually prioritizing the features that are asked by for multiple clients and then getting them into the nearest version if it's possible. And then everything else we try to build into the next iterations, right? I don't think there's anything that's impossible to build from our perspective. We believe that everything is solvable, right? It's just a matter of prioritization when we can build it and how fast we can build it.
Yeah. Thinking about supply and demand, just kind of the simple functions of it, how much are obviously you're servicing these hedge fund managers, really just empowering them with technology to do what they do better and more effectively. How much are they feeling the demand from those clients that they manage to actually get into digital assets? I hear a lot about traditional finance institutions really shifting their focus and incorporating this as a new asset class that they offer. Now, how much are those customers of theirs actually pulling for it? Have you seen an increase in spike of people who are investing to get into digital assets and using the traditional models as a segue into that? How much do you see the market pulling for that at this moment? Or is it still kind of new and people are dipping their toes in the water?
Yeah, I think it also depends on the type of the institution, right? So I see it as a spectrum, right? So on one side, you have crypto hedge funds, digital asset managers that are already managing crypto. They might already be doing some DeFi strategies. So we just provide the best tooling out there to enable them to do it better, right?
Yeah.
Those are early adopters, so even innovators, right? If you think about this adoption cycle for us. But then you have larger clients on the other end of the spectrum. You have like more traditional banks, financial institutions that are now just taking their first steps in the journey, right? Someone is building their own custody solutions, basic crypto trading, etc. So for them, it's still going to take some time. But we see on average that among financial institutions, there is a very, very high interest in the DeFi space. And now we see with, for example, Maker's partnership with traditional financial institutions, we expect a lot of new partnerships to unveil in the next few months, in the next year. And then there's another big topic, which is real world assets, right? The real world assets is basically tokenization of any sort of traditional financial asset that already exists in the world. And what's good about our platform, we just built the infrastructure. So you as a financial institution can use it for any asset you want, right? If you want to use it for the real world asset, for us, it doesn't matter. It's the same token that like anything else, like any other crypto. So by using this infrastructure, we're enabling a whole huge industry of actually $16 trillion of the tokenized assets down the road. And that's the most exciting for me as well, right? It's just building the fundamental base for everything that's going to happen.
Yeah. Thinking about you personally as a founder, going through this whole process, and I love to ask this question, founders, What's the hardest part about your job day to day? What's something that you spend a lot of time on that you wish you would spend less? Something that you spend little time on that you wish you could allocate more to? Anything come to mind?
Yeah, I mean, I think founders toughest job characteristics is just being able to stay on top of multiple dimensions, right? It's basically it's a multi-dimensional game where you have 10 or 20 different dimensions from product and tech and sales and regulatory aspects and legal and admin and everything, right? And you got to just stay on top of those. I try to spend as much time as possible on the client onboarding, right? Just talking to clients, understanding what they really need, and then spending some time on the product to make sure it aligns with what I'm hearing from clients, right? Obviously, fundraising is another aspect, right? So founders might be even number one job, right? To make sure that there's enough capital to actually execute on what we set out for, right? And I think that might be now much tougher than it used to be a couple of years ago with what's happening in the market. And obviously we were in the middle of fundraising last summer and fall, which was, I think, historically one of the worst times to fundraise. But we finally did it, right? And we closed our round led by Binance Labs, which is a top crypto investor in the world, right? But that was tough. And now we're starting the new discussions for our seed round. And I think the market warmed up a little bit, but it's still very conservative comparing to what we saw a couple of years ago. So I think now, it's basically the same for all the founders. It's just fighting for the attention of less conservative folks, capital allocators.
Yeah. What have you seen in terms of the funding environment? How has that changed in terms of like, I see that in my opinion, I don't know if this is contrarian, it's like a lot of VCs are turning into private equity companies, investing in companies that are profitable revenue rather than thinking about users and engagement and overall kind of quantity of engagement and operating on a deficit, but raising capital to kind of go boom bust cycle. Would you agree with that? Or do you have a different perspective on what you've seen? And especially, is it similar within the crypto space, whereas it's as affected as the other kind of startup funding environments? What would be your thoughts there?
Yeah. I think it's not a black and white thing, right? Basically just look at it as a spectrum, and it depends a lot on the stage, right? And obviously public relations came down, which means that the later stage startup relation came down as well. And everything just revised downwards. And now capital allocators trying to find this revenue generating companies, not necessarily paying that much attention to like potential companies with high growth, but no revenue, right? So to speak. And I think it kind of trickles down the stages, but luckily the pre-seed and seed, the earliest stages, because the amount of time until the exit is much higher, right? The period is much longer. There is still not that much of a direct correlation. I would say that the number of deals came down a little bit. The quality might have increased actually. And we see also all sorts of things right now, both on the DeFi space, crypto overall. I would say the market cooled down, which means that you're not going to get a term sheet within one day from 10 different investors after like one single call, right? But maybe it means that we're just back to normality, right? From that boom that we had a couple of years ago.
Yeah. I always like to ask this next question because I love how founders extract knowledge out of anything that they ingest. Whether it's early in your career now, what books or people have influenced you the most?
Yeah. So I think, and again, it might be a bit of a cliche, but I really liked Ben Horowitz's book, Hard Things About Hard Things, right? Because I think that is one of the very few books that is honest, right? That basically just describes real situations, and 95% of the books, or like 99% of the book is struggle, right? And that's basically how you define a founder's life, right? It's just everyday struggle, right? And obviously there's a lot of things going on every day, and it's good to have that perspective, like in that book, right? That nothing is wrong with you, right? It's just how it works, right? You're struggling every day, right? building a company is hard, right? It's
Yeah.
like,
Yeah.
so I think that's one of the good ones. And then on the crypto specifically, and especially for people who might be new to Web3 and crypto, I would highly recommend going through A16Z Crypto School. They got a lot of public videos. You can just watch it on YouTube. I think that's probably still the best content out there to just get up to
Yeah.
speed, especially if you're new to the space.
Yeah. Yeah. I love that sentiment. And I do like that book because it's reassuring that everyone's going through a similar struggle or challenge or hardship. But as you continue to go through it, you continue to hit the results you want if you push and have persistence, but also are aware and are conscious of how things might adapt and change. So it's like you said, it's comforting and reassuring that this is how it's supposed to be. I know we're coming to the end of the show here, so I want to make sure we didn't leave anything on the table. Obviously, I want to give you a chance to give us your LinkedIn's and your plugs and everything like that. But thinking about what we talked about today, is there any question I didn't ask you that I should have, or anything that we didn't talk about that you wanted to chat about? Anything we left on the table here today?
Yeah. Look, I think we covered a lot of things, and thanks again for the discussion. I think that's been great. I'll just do a couple of plugs, right? I think we talked about how we incentivize early contributors, how we incentivize everyone, right? Both the hedge funds and asset managers and their clients as well. So I would just invite everyone to go to our website, Velvet.Capital, check out the product, check out what we're building, go to the documents, read what we're actually planning to do, what our vision is. Go to our Twitter, follow us on Twitter, follow us on all the social media, and keep up to date with everything that's happening in DeFi and follow our product development. It would be great to have you on board.
Amazing. It's been such a pleasure chatting with you. And last little bit is, where can we find you as a founder? Give us your Twitter, your LinkedIn. Where can we engage and not only be a fan of you and what you're building, but also even connect with and maybe expand on new ideas? Where can we find you?
Yeah, sure. I'm on LinkedIn, which is my name and last name, Vasily Nikonov. And I'm on Twitter. You can find me by DeFi Vas, which is DeFi for decentralized finance. And Vas is the first three letters of my name.
Amazing. Vasily, it's been such a pleasure, like I said, chatting with you. I hope you enjoyed yourself today. And thank you again for being on Behind Company Lines.
Yeah, thank you so much, Julian.